You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-Mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-Mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Monday, 19th day of August, 2024. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. Hope you had a great weekend. It was hot here in Phoenix, as it usually is this time of the year. And we got one of those microbursts, as they call them, Saturday night. So woke up yesterday morning to a watery nightmare. We needed the rain, no doubt. Could have done without the high winds and damage they create, but hey, that's living in the desert, right? All right. Well, this is our second live broadcast of the day. We do 2 every trading day. Now, the first one is our live training room, and that's reserved for members only and those who are taking their 1-week free trial. If you have not taken your 1-week free trial, when Michael joins us about 12:50, he'll walk you through the process step by step. He'll show you the page you got to go to, form you got to fill out, how to hit the submit button. Just make sure you put in the correct information, because it's an automated process, and if you don't, we won't get it. But if we do get it, what'll happen is we'll get your desktop set up today, get your indicators indicating today, and then your trial will actually start tomorrow, which is a Tuesday. But you get 5 consecutive trading days, so that means it's going to stretch over next weekend, and you'll also get next Monday. 5 consecutive trading days, no credit card required. And you get access to more than just the live training room. In fact, we treat you just like a passport holder for 5 consecutive trading days, where you have access to all the resources that all of our members have access to. Only one exception, and that's the members only workshop on Thursday night. Gave you access to that, we'd have to change the name, and after this many years, well, we're just not going to do that. Now, as you go to sign up, if you have any questions at all, call us at 949-42-EMINI or shoot an email to support@cfrn.net. When the live training room ends each day at 11:30 a.m. Eastern, we take a 30-minute break and come back for this broadcast, which is open to the public. Everybody, everywhere on planet Earth with an internet-connected device. Now, there's 2 different ways you can join this afternoon broadcast live. Best way is you only have to do it once. Go to mytradingiq.com. Scroll down the page to where it says Noon Broadcast. Click that link, fill out that 30-second registration form. and you're done. What'll happen is going forward every trading day, you'll get an email about an hour before this broadcast starts. So at 12 noon Eastern, all you have to do is click the link in the email, and it'll automatically log you into our platform. The benefit there is you'll have access to the question box so you can ask questions and participate in the discussion. Of course, there will be days that you're out of the office, away from the desktop, but you still want to join live. And there'll be days when you're busy, you can't join live, but you want to catch up later. You can do both of those via our YouTube channel, which is very easy to remember. youtube.com/CFRN. You've already got the YouTube part memorized, so really all you have to remember is CFRN. Not only do we broadcast live every afternoon on our YouTube channel, as we're doing right now, we're simulcasting, but we also archive each and every daily broadcast. Currently, there are over 2,600 daily episodes archived for your educational and viewing pleasure. And if you're new to the world of CFRN, it is a great way to get to know who we really are. Not just today, not just this week, but thanks to the power of YouTube, you can see how we've evolved over the years. You can scroll back 6 weeks, 6 months, 6 years, even more. And just pick some days at random. Watch a little bit, fast forward a little bit, watch a little bit, jump to another day, week, month, year, do the same thing. You get the idea. It's a great educational resource for someone who is new to CFRN. Again, you can really see how we've evolved over the years. youtube.com/CFRN. And while you're there, be sure to hit the subscribe button, give us a thumbs up, tap that little bell. This way, anytime we go live outside of our regularly scheduled hours, you'll be notified. Now, this is our daily schedule, which we do our best to stick to as best as possible. So we'll jump into our daily devotional right now. We started a new topic back on Friday. Devotions for living in faithless times. And I would have to say that indeed these are faithless times. I mean, I would say we're about this much shy of Sodom and Gomorrah. Maybe we are Sodom and Gomorrah with the internet. I don't know. Anyway, today's scripture, Psalm 119, verses 9 through 16. And I'm going to share with you from the Message translation. How can a young person live a clean life? By carefully reading the map of your word. I'm single-minded in pursuit of you. Don't let me miss the road signs you've posted. I've banked your promises in the vault of my heart, so I won't send myself bankrupt. Be blessed, God. Train me in your ways of wise living. I'll transfer to my lips all the counsel that comes from your mouth. I delight far more in what you tell me about living than in gathering a pile of riches. I ponder every morsel of wisdom from you. I attentively watch how you've done it. I relish everything you've told me of life. I won't forget a word of it. Again, that was Psalm 119, verses 9 through 16. In the internet age, the need to memorize has decreased significantly. Some of you remember when you had to remember people's phone number. Now, all you have to do is remember their name and just say, "Hey Siri, call so-and-so," and it just happens. And Siri just lights up wanting to know who I wanted to call. That was just a test, relax. Why commit things to memory when you can find them on your smartphone? While memorizing trivial facts may be a waste of time, hiding God's Word in our hearts is not. By memorizing Scripture, we become more like the author himself. But how do we do it? What's the best method for memorization? According to Michael Nielsen, an Australian quantum physicist, science writer, and computer programming researcher, the answer is simple. Flashcards. Remember those when you were just a wee kid? Flashcards. Now, of course, he gives it a fancy name, the concept of spaced repetition. Taking a break between learning sessions to better recall the information later may not be new, but it's still effective. On X, the platform formerly known as Twitter, Nielsen said, "The use of spaced repetition memory systems has changed my life over the past couple of years. Here's a few things I've found helpful. I've memorized about 9,000 cards over 2 years. The single biggest change is that memory is no longer a haphazard event to be left to chance. Rather, I can guarantee I will remember something with minimal effort. It makes memory a choice. Rule of thumb, if memorizing something will likely save me 5 minutes in the future, into the spaced repetition system it goes. The next time you're sipping coffee, eating lunch, or waiting for a meeting to start, use the time to memorize Scripture. The more you get into God's Word, the more God's Word gets into you. And the more that happens, the less you'll be tempted to sin, because you'll be looking at the world through God's truth. So ask yourself, what verses have you already memorized? How can remembering God's Word help you avoid sin? Join me in a word of prayer. Heavenly Father, we come to you today with hearts desiring to walk in purity and truth. Your word tells us in Psalm 119 that by living according to your word, we can keep our ways pure. Help us, Lord, to seek you with all our hearts, not straying from your commands. Let your word be our treasure, hidden within us, that we might not sin against you. Give us the joy of delighting in your statutes, meditating on them day and night. and living them out in our daily lives. May we never forget your word, for it is the light that guides our path. It's in Jesus' name, believe and pray. Everybody said, amen. Amen. Happy Monday. Let me give you the numbers from around the world. Start here in the U.S. with the cash markets, with the indices as they're called. Currently the Dow is up 163 points. The Nasdaq's up 57, make that 60. S&P 500 is up 22. And the Russell 2000 is up 12. In the commodity basket, crude oil is down $1.29, trading 75.36 last. That's a drop of over 1.5%. Gold up $5.20, trading 25.43 last. Silver up 53 cents, trading 29.38 last. That's a gain of almost 2%, or a little over $2,500 per contract traded. In the Asian markets at the close, after having a 4-digit gain Friday, the Nikkei is down today 674 points. It's a drop of 1.75%. The Shanghai is up 14 points. The Hang Seng is up 139. And for the Hang Seng, that's a gain of almost 1%. In the European markets at the close, FTSE up 45, the DAX up 99, the CAC up 52. So we had a mixed day in Asia. It was a green day for the UK. And so far, it is a green Radio Monday here in the US of A. Let's take a look at a couple of news headlines. Federal Reserve Chair Jerome Powell and his central bank colleagues face a very different dilemma than they did a year ago as they gather later this week for their annual economic symposium in Jackson Hole, Wyoming. Last August, the main question was how long rates would need to stay at 2-decade highs to cool inflation. This year, as inflation shows new signs of cooling and the job market slows, the question isn't whether the central bank will cut rates in September, but by how much. Investors will be listening for an answer on Friday during a 10 a.m. Eastern speech delivered by Powell, where the chair will have his chance to provide clues on the path forward for monetary policy. And of course, you know I'm going to encourage you on Friday at 10 a.m. Eastern to be flat any positions. Now, I'm not talking about your long-term investments, but your trading vehicles. Climb up in the grandstand, watch the action on the field, and when the market resumes its normal rhythm, then you're ready to dance. Now, Jerome made it clear during a July 31st press conference that a 25 basis point cut was possible next month, but downplayed the idea of doing something bigger, such as 50 basis points. He said, "We think the time is approaching, and if we do get the data that we hope we get, then a reduction in our policy rate could be on the table at the September meeting." Now, at the time he made that statement, he did not know that the new economic policy table on the table heading into the election, and which will be espoused at the DNC this week, was one of socialism, Marxism, communism. I wonder how that will play. Talking about price controls. That's how it always starts. First they take your guns, and then the government literally takes over your business. Because they tell you how much you can charge for what. And while in theory and on the surface that sounds like a positive thing, maybe for people, what it leads to is empty shelves, long lines of people waiting just to get bread. And of course, some of you are old enough to remember those long gas lines at the pumps back in the 70s. You had to get up at 4 a.m. in the morning to go wait 2 hours in line at the gas pump. And your license plate had to end in a certain number, even or odd, or begin with a certain number, even or odd, to tell you whether or not you could even get gas that day. I'm sure there was a great black market in license plates, stolen license plates at that point. The tradition of gathering in Jackson Hole began more than 4 decades ago, when officials from the Federal Reserve Bank of Kansas City picked the spot for their get-together in 1982. That year, the Kansas City Fed figured the best way to ensure then-Fed Chairman Paul Volcker would accept an invitation was to locate the event somewhere with good fly fishing in late August. It was widely known that Volcker was fond of the sport, and if you study history at the time, he was probably one of the most hated men in America. Decades later, central bankers from around the world, academics, policymakers, and journalists still gather in the same place to discuss the economy and monetary policy. The event is held at Jackson Lake Lodge in Grand Teton National Park. And every news service from around the globe will have their vans circling the building with their little satellite dishes pointed skyward. Traditionally, Fed chairs have used their Jackson Hole speech to deliver an important, longer-term policy message. Former Fed Chair Ben Bernanke used his speech in 2010 to present an argument that the Fed could get the economy going by purchasing bonds, a tool also known as quantitative easing. And we all know how that worked out. Powell's 2018 Guided by the Stars speech, perhaps his most memorable as Fed chair, outlined how he thought about the natural real interest rate, the rate that neither spurs nor slows growth. In 2022, Powell sent the markets plunging after vowing in a shorter than typical speech to do whatever it takes to get inflation back to the central bank's 2% target, warning that higher rates could bring pain and higher unemployment. He must be psychic. Have you been to a concert lately? Given the economy, maybe not. Hey, but if you still got some room on the Visa or MasterCard, maybe you have. 10 additional states have joined the U.S. Justice Department's lawsuit against Live Nation Ticketmaster for monopolizing markets across the live concert industry. The Justice Department, along with a group of 30 states and the District of Columbia, filed a lawsuit in May to break up Live Nation, arguing the concert promoter and its Ticketmaster unit illegally inflated concert ticket prices and hurt artists in the process. Now, I think you know how it's done. They have computer software that the second tickets go on sale to any particular concert, whether it's Taylor Swift or whoever, Live Nation goes in and scoops them all up. Boom. In the blink of an eye before you can even get logged in. So now they own the whole supply. That's why to go to a concert today where, when we were kids, $20. If you spent $20 to go to a concert, it seemed like a lot of money back then. But if you want a good seat at a big name concert today, you may pay $500. And if you want a really good seat, you may pay $5,000. That's because Ticketmaster, not the artist, controls the supply. And remember, the artist agreed to originally sell the ticket for $30, $50. But by the time Ticketmaster's done, that same ticket may be $3,000 or $5,000 as it's sold and resold on the secondary market. So for once, I'm on the side of the U.S. Justice Department. I hope they can put an end to this so people can go back to enjoying concerts. I'm not a big concert fan. I've never been a fan of being inside a crowd of sweaty people all pushed up against each other. Yeah, that's just not my cup of tea. Now, speaking of the DNC, the economy will be a paramount issue this week as Democrats gather in Chicago to fully anoint Kamala Harris as their nominee just weeks after President Joe Biden dropped his own bid for the presidency. Now, we all know Joe didn't drop his own bid for the presidency. He was kicked out. And it's now become obvious how many, including Kamala, hid his cognitive decline for so many years, talking about how he was the hardest working man, the best president ever. In other words, Nero was fiddling as Rome burned. And everyone around him in his inner circle were going, what fire? Harris told reporters Sunday that much of her convention speech, scheduled for Thursday, has already been written with only a few tweaks remaining. Now, not only did they boot Joe out of running, remember, he was the duly elected president. He went through the whole campaign process, primaries, and, depending on what you believe, was the duly elected president. Now, I know there's still a lot of questions out there about that. But Kamala has just hopscotched over all of that. Oh, why should I need to go through a primary process? Why should I need to earn delegate votes? I'm obviously the best pick for the position. And so they've given Joe the Monday night slot at the convention, long known as the worst possible spot. So they've really just added insult to injury. Now, the convention follows last week's release of Harris's cost of living plan. which focused on housing costs, drug costs, and grocery store prices, and a heated back and forth on the economy with GOP nominee Donald Trump that continued through this past weekend. The days ahead will feature plenty more from both Democrats as well as from Trump, who will be traveling all week, starting with a schedule today that his campaign promises will be focused on making America wealthy again. Harris is still being defined when it comes to the economy. The Washington Post, ABC News, Ipsos poll released Sunday found that while 72% of Americans rate the economy poorly, they're giving Harris some leeway on it, when in fact it was her and Joe that created this economy that we now live in, along with a little help from the Fed. They inherited a 1.4% inflation rate and immediately ran it up to over 9%. More than 6 in 10 respondents think she's had limited influence on the administration's economic policies. Yeah, just like she had very little influence on the border, although that was her job, which she now denies. Don't people know there's such things as the internet and YouTube videos and cameras and video recorders? Here are some of the economic themes to watch as Democrats gather with just 78 days until Election Day. There will likely be an attempt by speakers this week, and that list includes President Joe Biden, Michelle Obama, as well as both Harris and Vice Presidential nominee Twisted Tim, to continue focusing on specific kitchen table issues over broad economic themes. It's a tactic that reflects polling that has repeatedly shown voters are focused on prices and personal economic concerns above all else. The golden rule is stay away from anything macro that is about other people's lives and bring everything to a micro family budget level. Now, a Harris supporter and co-founder of the Progressive Change Campaign Committee, Adam Green, has overseen a range of polling in this area and often briefs the Harris campaign on his results. I do think that as you watch the convention, there will hopefully be a through line of economic populism or fighting for the little guy. Now, that comment that was made about Marxism and communism is just about being neighborly. That means taking from your neighbor and giving to somebody else. It's all spelled out in the rules for radicals. That's what Obama was raised up on. And this is who, of course, Kamala is trying to imitate. And she's not doing a very good job. Stocks rose for an 8th straight day, the longest winning streak in 2024, with traders hoping the Federal Reserve will signal it's ready to cut rates. With the central bank approaching a crucial pivot point, it's difficult to overstate how much attention financial markets will be paying. For starters, they're looking for confirmation from Jerome Powell on Friday that the Fed will lower rates in September. But more drama surrounds what happens after that and the pace of additional cuts over the next several months as the Fed confronts the dual risks to both inflation and employment. A bumpy stretch for traders across financial markets in the dog days of July and August hasn't tempered their zest for stocks. allocations to the asset class still robust despite a bout of recent volatility and heightened uncertainty around the economic outlook. Investors climbed a wall of worry as the stock market relief rally gained momentum. Equities will likely consolidate ahead of the Fed commentary at Jackson Hole this week, according to Craig Johnson at Piper Sandler. At Bank of America Corp, Oh-Soon Kwon says the Fed is unlikely to outdove the market. But as long as growth is okay, equities can withstand a less dovish Fed. Stocks just need a nod that growth is going to be supported, one said. While our view is that risk is to the upside, we do not believe that Jackson Hole will spur the large equity moves that it has in the past when the Fed used it as a forum to telegraph upcoming policy decisions. U.S. workers, on the other hand, are growing more sour with their employment compensation, according to a survey released today by the Federal Reserve. In its survey of consumer expectations labor market survey for July, the regional Fed Bank said that as of last month, satisfaction with wage compensation, as well as with non-wage benefits and promotion opportunities at respondents' current jobs, all deteriorated. As of July, 56.7% of respondents said they were satisfied with their pay compared to 59.9%, who held a similar view in July of 2023. Benefits satisfaction dropped to 56.3% from 64.9% over the same time period, while satisfaction over future career path improvement ebbed to 44.2% of those polled, down from 53.5% in July of 2023. The survey noted that the declines in satisfaction were concentrated among women, those without college degrees, and those who earned under $60,000 per year. The survey did find a small increase in those who planned to move to new jobs, with 11.6% of respondents saying in January they plan to find a new employer versus 10.6% who felt likewise in July of 2023. Now let's talk Texas. A persistent drought in Texas is hurting the finances of a small town, making it unable to pay bondholders in a rare instance of, and it pains me to even say this, climate-related default. Just more evidence that climate change, it's a real thing. The city of Clyde, located halfway between Dallas and Midland, informed investors it couldn't make a debt payment due in August. That's according to a securities filing. Instead, its bond insurers, Assured Guaranty and Build America Mutual, were asked to cover the payment, illustrating the financial strain facing the city. Such draw is unscheduled and reflects financial difficulties of the issuer, including without limitation financial difficulties resulting from increased costs related to operations and maintenance of the issuer's waterworks and sewer system. The bonds were sold to support the city's water and wastewater system. Now, if I'm not mistaken, we had an infrastructure package that was supposed to help this issue. Kind of like the Inflation Reduction Act. Didn't exactly do what it was supposed to do. And last, General Motors said today It's laying off more than 1,000 salaried employees at its software and service units worldwide. GM, confirming the layoffs initially reported by CNBC, said in a statement that as we build GM's future, we must simplify for speed and excellence, make bold choices, and prioritize the investments that will have the greatest impact. CNBC said the job cuts include roughly 600 jobs at GM's tech campus near Detroit. GM, which said about half the cuts are in the United States, said the cuts were not because of cost cuts, but came after a review of operations following the departure of Mike Abbott, Executive Vice President of Software and Services in March, who left due to health reasons. Abbott was a former Apple executive hired in 2023 to spearhead GM's software development efforts amid an investment ramp-up from the automaker in electric vehicles and subscription-based services. In April 2023, GM said about 5,000 of its salaried workers took buyouts to leave the company as it worked to hit a $2 billion cost-cutting target after it cut hundreds of executive-level and salary jobs in February of 2023. Now, Logic 247 really tells us a lot. We're in week 316. Over the last 316 weeks, we have issued over 17,600 individual handcrafted alerts. And what we've averaged over the last 316 weeks is 20% or less of the alerts being stopped out based on market structure and a very simple process we teach all of our passport holders. Now, because of the uncertainty in the markets, when the markets opened last night at 6 p.m. Eastern, I only issued a total of 6 alerts. When Valerie did the recap this morning at 6:30 a.m. Eastern, and she'll update it later this afternoon, we were left with 3 waiting, and of the 3 actionable alerts, 2 stopped out. Lack of follow-through. At 67% of actionable alerts. So over the last 3 weeks, we went from 6% stopped out at the end of the week to last week, 22% stopped out, to today, 67%. That could be our worst one-day performance in 316 weeks. But it is what it is. We don't sweep it under the carpet, because that's the truth about trading. Now, the logic alerts are designed to help you read the chart, to understand where windows of opportunity exist and where you're most likely to find targets or obstacles, however you want to label them. Each logic alert has an entry price, an initial target, additional targets, and a final trade to target. Again, the logic alerts are not designed for you to trade, so you don't have to learn how to trade. They're designed to help you learn to read a chart so you can then learn to trade. You can't really learn to trade until you're able to read the chart. When you started school, first thing you had to learn was how to read, right? Except there it was words and sentences and paragraphs, etc. But there's none of that in a financial chart. It's all about price action, price flow, and what the next high probability move is. So these are the things that you learn via Logic 247. Now, our original alert service, the concierge trade alerts, these help you really understand whether or not you have learned to read the chart. The logic alerts can come out anytime around the clock, 2 a.m. or 2 p.m., whenever opportunity presents itself. Futures trade around the clock, and we have traders around the globe. So a logic alert can come out at 2 a.m. or 2 p.m. The CTAs are published as a static report shortly after the Globex Open, Sunday night through Thursday night. So we all know today's the Monday session, but it began last night for futures traders at 6 p.m. Eastern when the Globex markets opened. And the CTA report was published at 6:25 p.m. Eastern. Now, at 6:25 p.m. Eastern, all of our members and trial members had all of these targets. When the report comes out, the first thing you want to do is go to the 30-minute chart of whatever markets you actually trade and make a note where price was at the time the report came out. It'll always be between these two numbers. Then draw a line in the sand at the long target and a line in the sand at the short target. These will serve as great visual cues to help you stay on the right side of the street. If price gets above the 30-minute BBC, it's attempting to reach the long target. If price gets below the 30-minute BBC, it's attempting to reach the short target. That part's pretty simple. This is where you get to look left to spot your entry point, your targets or obstacles, and by now you're learning how price behaves at a weekly trading zone. That's important because price is always trying to reach a weekly trading zone. Yeah, now the zones are issued Monday morning at 6:15 a.m. Eastern. Once they're published, they're carved in stone the entire week. They don't change in any way whatsoever. Last week was a very unusual week. We had a number of markets that closed above the highest weekly trading zone. We've published the zone since December 14th of 2009. We're closing in on 15 years. And again, they come out Monday morning, 6:15 a.m. Eastern. There was a typo in the NQ, which we straightened out in the live training room this morning. It's just one number that got mistyped. But anyway, you got to resist the urge to complicate things. As long as you know which way the wind is blowing, it's pretty simple to reach the goal for the day. Now, you should always start from the top and work your way down. That's why I recommend, no matter what you trade, whether it's futures, stocks, crypto, Forex, ETFs, take 2 minutes to see the daily chart. You see, institutional traders, the ones who actually move price because of their account size and the size they trade in, they look at daily, weekly, and monthly charts the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. So by looking at a daily chart, you're literally peering over the shoulder of the deep pockets who actually move price. And most days, it can be pretty obvious which way the wind is blowing. We've had a nor'easter now for 1, 2, I can't really count this one, 4, 5, 6, 7, 8 days. And we're now approaching this retracement high. In fact, we've overcome it. The retracement high was 5,603/4. Today's high is 5605.5. So we're coming up against the 38% fib extension, potential resistance, and this high here at 5629.75. Then we have the 50% fib extension, the 62, and the all-time historic high put in July 16th, 57.21 and a quarter. Now, should the market find resistance at any of these spots, initial support is at today's low, 24% fib extension. Then here's the 24% fib retracement. Then we have the daily step line, which lines up with the low of Friday. Then we have the lowest fib extension. That's potential support. And the daily BBC is currently above the 38% fib retracement, which on the way back down could be good support. And we have blue and climbing as potential support, the 50% fib retracement, the 62, and the previous bullish cross. Now, all alerts are created on the 30-minute chart. The vertical line separates today, Monday, here's Friday, here's Thursday, and we did close above the highest weekly trading zone. It's a rare occurrence, but we did it across a number of markets last week. Here's where we opened last night. We had a slightly higher gap open. We made a run up. We couldn't overcome blue and climbing. When blue and climbing, you see here, blue and climbing is your friend on the way up. Got price, step line, blue and climbing. Once blue and climbing gets directly above price, it often becomes resistance because it's on its way to red and falling. And sure enough, while the pullback holds more often than not, whether you're pulling from above or pulling up from below, eventually price will trade through the BBC. And it took us down to here. This low came in just below this low. And this low barely spiked the previous bullish cross, which we would expect to be support. So as price came down an hour after the London Open, we spiked that bullish cross, but then quickly respected it. Resistance sends us to support. Support sends us to resistance at blue and climbing. That support gets us above the BBC. So we make a run higher. And I suspect we had some 10 o'clock news. I haven't really looked at the news yet today. That spiked the BBC, but the pullback still held. And we continued our move, and we've just now arrived at the long target. Now, these are last week's zones on the chart because the new zones don't come out till Monday morning at 6:15 a.m. Eastern. So any alerts that go out Sunday night, of course, are based on the previous week's zones. So tomorrow on this broadcast, you'll see this week's zones on the chart, because it just came out this morning. Any alerts that were issued today were based on this week's zones. So there's the ES trying to work its way through that zone. On the Dow, here's where we opened last night. Kind of the same scenario. We pulled back to just above the bullish cross. Buyers came in early. We got a leg. We got a retracement. We got a leg. This initially took us through the target, back to the step line where the market found support, which took us through the target again, and then supported blue and climbing. Now we've got a bit of a double top on the Dow, and you'll notice the step line starting to curve to the right. Once the step line crosses blue and climbing, that's when we expect price to retrace back to the BBC. Just as it crossed here on Friday, and we got our pullback. In this case, as I explained, we traded through it. On the Russell, here's where we opened last night. We got a leg, a retracement, a leg, See how blue and climbing was support on the way to becoming red and falling? And that took us down where? To the bullish cross, where we created a double bottom. Once we got above the BBC, took out this high, this high, this high, and made a run from 2162 up to 2164. That's good for the goal for the day. We've now spiked it a little bit up to 2168. Got a retracement to the step line. And that step line, as you can see, starting to hook to the right. So the chances are it will cross blue and climbing, and we'll get a retracement to the BBC. Once that happens, then of course it's a question of whether the pullback holds or not. Now watch for the potential of price to spike the BBC because you got a bullish cross right below it. Okay? So it could look like the market's heading south, but you got potential support here. Then you've got this double bottom here based off this bullish cross back on Friday. On the NQ, here's where we opened last night. Attempted higher. We made it up to Friday's high. That's as far as we could go in early trading last night. That sent us below the BBC along with red and falling, and it took us right down to the short target to the tick. Support bounced us up to resistance. Resistance sent us to support. Support has now got us above the BBC, and we're making our way up to the long target. So that covers the indices. When we come back, we will start with crude oil, which, by the way, we have rolled to the October contract, GCLV. We'll pick up with that when I come back. Right now, Michael's going to give us a recap of what happened in the live training room this morning. Then we'll go live on TradingView for 30 minutes, do some live trading. Then I'll finish up the alert recap and wrap things up with our good word for the day.
All right. Ready to go.
Looks good.
Here we go. Thank you. All right. So, good afternoon, everyone. Today is Monday, the 19th day of August, 2024. Now, if you have not taken a free trial with us and you'd like to, go here to mytradingiq.com, click on this purple button right here. When you click on that purple button, there's no credit card required to take the trial. Just click on that button. It's going to bring you to this registration page where all that we ask for is your name, email, phone number. In here, there are 5 multiple choice questions, and down here gives you an illustrated machine ID. Or here you can give us a TradingView login ID. Hit the register button. When you do that, we'll know that you entered this information. We'll be able to enable the indicators for you so you can get your indicators indicating on your charts at the beginning of your trial. That's where you really want to be. Okay. Now, this day started off with a bang, but then it kind of sizzled out. If you're going to look at the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today, we got our goal for the day in 3 minutes and 1 trade, just like the last on Friday. Except today, we only got $2,000, $100 per contract with 20 contracts on. And we took a total of 11 trades this morning. So on the NQ, we were up 57 ticks at one point, and then we stopped out 3 times, I think. And we got down to minus 35. On the Russell, we got up to plus 35. That was our high of the day on the Russell. On the YM, we were up at 10, and that was our high of the day on the YM. And on the ES, 8, and that was our high of the day on the ES. So the 3 stop outs that we had, 3 36 tick stop outs we had on the NQ, kind of took it out of us today a little bit. But it is what it is. We ended up with plus 150 on the morning session. Again, it took 3 minutes and 1 trade to get to $2,000. So on the month now, we're at $7,805 over 13 days, averaging $600 per contract per 2-hour business day. And on the year, we're now at $65,757, averaging $429 per morning session. Okay. If you're doing the 24/20 blueprint and you started out with 1 contract at the beginning of the year, added 1 contract a month following the plan, you now would be, if you did everything just like me and quit trading when you got your goal for the day, quit trading when you got your goal for the day. So that means this morning it would have been 3 minutes, all done. Friday, 3 minutes, all done. Thursday, 7 minutes, all done. Wednesday, busy day on Wednesday, 18 minutes, all done. Tuesday, 4 minutes. Last Monday, 11 minutes. So you don't have to trade forever. You just get in there, get your money, and get out. And if you did that every day so far this year, you would be averaging $1,871 per hour. Right? If you started with me last year, well, if you did it this year, you'd be at 8 contracts right now and averaging $1,871 per hour. If you did it with me last year, starting last year, you'd be at 20 contracts now and averaging $7,286 per hour. Okay, $7,286 per hour. All right, so let's get into the actual trades. There weren't a ton of trades, so there's not that much to get into. The whole diamond principle that we had started to chart out over here, it never happened because we never got up into this level right here, right? So the fact that it extended it all the way down here and then all the way out here, like this, what that means is the next level gets extended like this. I'll show you. Trend line goes from the bottom here all the way up to the top there, and the trend line goes from over here all the way over to here like that. All right. So what you're anticipating in the future would be at this point in time will be at this price using the diamond principle. All right. Now I know that doesn't look much like a diamond at all, but if you were to come in here and draw something on it like this, the way it actually came together was kind of messy. I'll try to draw it for you as neatly as I can. It goes down like this, then up like this, then up like this. So that's about right. A little bit further. Up like that, then down like that. So this is the minimum that you would expect it to get to. And this is what you would expect it to repeat the leg length to, right over there, right? This is your timeline, right? Here's your timeline that was established by this, all this junk right in here. And this is your price line, right? And that was established by this. So if the markets are going to keep going up and we finally did just break through right here, then that's what they should do. Okay. That is just to give you guys a little bit of a method of determining time and price in the markets. Okay. The last one, if we go back and do it over again, we can do this one right here, I suppose, or we can do this one right here, either one. But if you do the same thing, you take the same pieces of information here. We don't have any trades right now, that's why I'm going through all this. It's the same pieces of information there and there. You make the same diamond up to here and then down to here, and you extrapolate from that same information. I kind of drew it wrong, but anyway, this amount of time right in here is about the equivalent of that amount of time, and this amount of space right in here is about the equivalent of this amount of space right here. So if I drew it right, it would look right. But there's your diamond, and here's what it extended to, right in here. I'll do it for you one more time. Okay, this time I will use the actual values. So that's how high it had to extend. And this is how long it had to extend. Okay, so it got there ahead of time because the actual timeline should have been like that. So it should have been over here. But the distance was hit a little bit early, it looks like. and it wasn't actually hit completely. And that's the second time it didn't actually finish out that move today. But there it is. And so that's kind of like things have been today. Not a whole lot of follow through on the moves. But anyway, the trades that we took. Did I go through them all already? Did I go through any of them? On the YM, I'll just go through them all. On the YM, we just had a couple of trades. We took this one right here, and we got 10 ticks profit on that one. All right, we haven't had much happen since then. On the Russell, that's where we had a few trades here on the Russell, I believe. Yes. Starting out at the beginning, we had a break even on that one, a break even on that one. This one at the diamond principle. We had this one here, we picked up 20 ticks. It's like we got the goal for the day on the Russell, so that was right in here. That should, one of these in here. It was right at the open, right at the open. Right here. That should not be that should be a blue arrow, not a yellow arrow. Got the goal for the day on the very first trade on the Russell. And picked up 20 ticks on that. We had a break even there, then 10 ticks got us to 30, then another one there got us to 35. Am I looking at the wrong thing? I don't think I am. Another one got us to 35. And so I'm missing one trade in here on the Russell. And this was diamond principle. If it was going down, we would have expected this, but if you just flip it all over, it got to exactly the right spot, flipping it over. And okay, this is the day. That's why it was looking so weird. I was on the wrong day. Okay, so here we Russell, the very first trade here, right at the open, we got 20 ticks. That's what's going on. Nobody told me. We got 20 ticks on that one. We got 10 ticks on the second one that put us at 30. We got 5 ticks on the third one, put us at 35. Whew, thank goodness. That all makes sense now. All right, then the market just went really flat for a long time. And there's just not a lot going on there now. All right, the ES, we had just one trade at the end of the session on the ES right here. We picked up 8 ticks on that, and that one didn't complete the trend. Well, until right now, it finally completed the trend. This is the level it had to get up to, and it just got there right now. All right, and that was it for us. That was it. All right, so now we can just look at some more trades in here, I guess. Nobody's asking any questions. I don't have the YouTube channel running right now, but I will go take a look out there in a few minutes. All right. I don't see any questions. We don't really have any trades setting up right here. The ES is still on the 7 range. If we bump these down to a 7 range, we might get something here on the Russell and the YM. So having the larger time frames like that is going to reduce the number of trades dramatically. Now, if I have this set to the right, the sensitivity for this size, which is 0.1 instead of 0.2, then you might see some trades generated in there. Okay, and I will go some range on this just for the sake of getting some trades possibly in here. On the NQ, we're going right into this weekly trading zone right here, you can see. And so we don't have anything we can do with that one. Now, those of you guys who don't know, you know, I'm wanting to go to the larger time frame to help you guys out as much as help me out. It's fewer trades, it'll be more meaningful trades, but this is where I see it going in the future. All right, where you have just a nice ribbon here, and you have an oscillator down here. The ribbon is spread out, and the oscillator comes out of the overbought or oversold, and you have a trading opportunity. Right? It's as simple as that. That's where I want it to be in the future. All right, so you'd have a nice trade. Well, back here, the push up. You'd had several trades here this morning. This is the ES. All right, so almost when the ribbon is spread like this, pretty much every pull out of the oversold here would have been a valid trade and would have been a profitable trade. Okay. That's where I want it to go in the future. Very simple and straightforward, not a whole lot of thinking. And it'll be easier for everybody to keep up with me if I do it that way. Right? That's the plan. So we're just going sideways here on the YM. Not a whole lot going on there. We're just going sideways here on the Russell. Not a whole lot going on there. And the NQ is going into a weekly trading zone. So it's 111. We still have 19 minutes left in here, and I don't know that we're going to get anything else. So let's go out to 5 and look at Bitcoin. Oops, that's yes. Go out to 5 and look at Bitcoin. Okay, so we have lower highs and higher lows here. Lower highs and higher lows here on the Bitcoin. And it needs to get out of this area right here. It needs to break out of that. I don't know what side it's going to break out on. But whatever side it breaks out on, hopefully we'll have some momentum and keep going. I got to think it's going to break out on the upside. Who knows? You know, we have the DNC this week. And it's, I don't know. It's like the total opposite of the RNC. You know, the RNC, they brought in Hulk Hogan and all these kind of male figures. And in the DNC, they're going to bring in all these female entertainers. Be interesting. Actually, it would be interesting at all. I'm not going to watch a second of it, but I'm sure the media is going to eat it up. All right, so Mara is, you know, we're looking at the triangle on that last week. It broke out to the upside of the triangle. Now it's still having trouble getting out of this range that it's been jammed up in. But this is a 30-minute chart, and we still have this gap to fill right here that it didn't fill the other day. Okay, if we go out one more, we had a bond auction today, I think, at 1 o'clock. I'm sorry, it was at 11:30. Had absolutely no change in price on 3 range. There were the 3-month bills and the, I think, let me go look. Where were they? Today, the 3-month bills and the 6-month bills. All right, we don't have 3-month and 6-month bills, but we have a 5-year, a 10-year, and a 30-year. They might have a 3-month and a 6-month bill. I don't know. There's a symbol for that. Let's do 3-month. Here it is. SIBO. Yeah, there's nothing you can do with that. Nothing at all you can do with that. But Matthew, is Matt in here right now? He is not. The one thing I was looking at with Matt was stuff right here. And that has me curious about something else. That I can't show you right here right now. I don't think. No, I can't show you right here. All right, so the NQ's got a green arrow along here. It should possibly push up into the weekly trading zone again here. It's probably what you're going to be seeing. One last push right up here into the weekly trading zone. I don't know. Everything is looking so weak. Over here on the Russell, we have a bounce off the ribbon that's going nowhere. On the ES, we have a bounce off the ribbon that's going nowhere. The YM is leading the pack to the downside below the BBC. So it's like everything just got tired out and it's going to start pushing down. I did go out to look at the larger time frame stuff today, and I'll have to change this back to a 30-minute. Now change it to a 30-minute. Okay, so we were looking for it to get out of this box this morning, and it did get out of the box up to the weekly trading zone up above, and now it looks like it's getting ready to pull back down to the BBC, which would be down here. About 50% between these two weekly trading zones, a midpoint between the zones. All right, in the YM, we were looking for that to get out of its box, and it did, and it went right up to this weekly trading zone. Again, the same thing, the black step lines are across CMA1 for a move back down to this weekly trading zone and the BBC. So that's looking pretty bearish there. And the NQ did the same thing. This is the area it's got to get up to fill the gap from 2 weeks ago on the NQ. Still doesn't fill that gap, I don't think, has it? No, it hasn't. Almost there, though. And what should we have left? Russell. Right, and Russell went up to the zone. Sleepy times. I think everything could turn down right here for a little while to get down to the next weekly trading zone down below. This one down to here, this one down to here, this one, the Russell down to here, and the YM down to this one down here. That's what it's looking like to me. You know how on the larger time frame, on the larger time frame, if you're below the BBC, it's trying to get to the zone below, and if you're above the BBC, it's trying to get to the zone above. They're all trying to get to below the BBC, it looks like right now on the larger time frame. That's what it looks like to me. I don't know if they're going to do that, but they're all due for a pullback, and that pullback will put them right back down to the current, well, the weekly trading zone down below. Right, this one, this one, this one, and this one. All moving down to that weekly trading zone down below. Okay.
There's a question for you on YouTube. Greg asked, how do you get into a trade specifically?
Specifically, buy stop limit order. Let me open up YouTube so I can see the actual question. I don't have it open.
That's word for word.
Okay. Buy stop limit order. And I'll show you what I mean by that. Over here, for instance, on the YM, we don't have a trade here yet, but if we did have a trade, and let's say I was going to be looking for a trade on the down close of this bar, we almost have a trade there. So it's almost perfect timing for the question, Greg. If price hits the ribbon right here, then I'll look for a down close. So right now, let me bring over my YM down. Let me find my line down. Oh, there it was right there. I just moved it. Here it is. All right. So the high of this bar right now is right here at 41,002. So 20 ticks below that is right there. 82. This is a 19 range. Oops, nope, sorry, this is 7 range bar. So 8 ticks below that. Sorry. That's not going to be a trade. It's not going to be an actual trade. It's got to hit the ribbon to give us a trade here. I forgot to switch it back to the 7 range. So it would be 8 ticks below that right now. It's got a high of 02, so I would be selling 94 like that. All right. If we got it, it's not an actual trade, so I'm going to take it off. But if we got a down close on this bar and I knew ahead of time that that was going to be a trade, I'd have my order waiting right there, my sell stop limit order waiting right there at 996. All right, that's why we use range bars, so you can put the orders on ahead of time, be proactive like that. So specifically, that is exactly what I would do. We want this to touch the ribbon right here, and if it does touch the ribbon, then I will put a trade on for you. I'm going to go up just one more tick, and then I'll put the trade on. Okay. Right now it's not touching the ribbon. It's going to go up one more tick. Give me that. And it's almost there. Not quite. There it is. All right, so now we've got a high on this bar right now. The high is right here at 04. So I'm going to sell 97, sorry, 96. Now the high is all right there. So I'm going to sell right there. All right, so what I'm doing is selling 8 ticks below the top of the bar. All right, 8 ticks below the top of the bar. So now the bar is all the way up here. And this is not the kind of trade that I want to be proactive on. Because overall we're in an uptrend and this is a pullback in the uptrend. So I want to see the green arrow actually print. But let me this here a little bit for you. First slide this over, and I want it to prove to me that it's going to come out of the overbought. I want to see it come out of the overbought. So it'd be 08 down to 41,000. But it's got to pull out of the overbought for it to actually be a trade. There it is. Okay, so now I'm going to trade it right here. Okay, so I'm trying to get filled right there. That's a valid trade if I get filled. And you know what? I'll even take one tick slip. If we get filled, then it's a valid trade, right? If it goes down one more tick, then it's not. I'm going to take it off because it's already gone enough to get the stop to break even. Right? I'm going to let it try to fill me one more time. There, it just filled me. Okay. So it's a valid trade right here. So you saw me put the trade on, and now I'm expecting it's going to get down here to 986. All right, 986. At a minimum, it should get down to right here. Now, after I get 4 ticks in profit, I'm going to bump my stop to break even. It needs to go down one more to get my stop to break even. Okay, in this case, it was a limit order, but normally it would be a buy stop limit order. Okay. Throw my stop at break even. It's at 4 ticks in profit. But normally I would have a buy stop limit order or a sell stop limit order on. It's trying to get down to right there. I know that's one below the swing low, but that's what the DOM was just saying. And that's in Thursday's lesson plan, how to read the DOM. You'll see it in a second here when it gets down there. There it is. That's why it's trying to get down there. Now I'm going to start locking in some profit on this. All right. I have 20 contracts on, so it's basically $100 a tick for me right now. Right, so I just locked in $300 right there. And I just got out with $300 right there. Okay, now what I anticipate is that's going to get down here to the swing low, and it should exceed the swing low. The DOM is suggesting it's going to, just a little bit. Okay. Now, if we were to do the diamond principle in here, what it's going to do right now, the price point is pretty easy. The price point's always the easy part. This is where it should be going down to. All right, the price point is the easy part. The time point's the part that's not. So that's where it should be going down to. All right, you want to try to get a little more out of this trade, that's what you should see. All right, now that's not necessarily going to be a straight ride down there. It's probably going to go down. exceed the prior swing low, pull back, and then go down again. Maybe give you a second trade, but if you want to just stay in the trade, that's where it should go down to right here, right now. Okay, so the Dom was suggesting it was going to go to right here at 985. And let's see if the Dom's suggesting anything else right now. 979. 979 is what the Dom's suggesting right now. Okay, where's 979? 979 is right here. Right, so we got to the 85 one that the Dom has suggested. And now 979 was the next one. We're almost there. Almost there. There we are. We had the 979 one. The next one down, it's not showing anything else on the downside, but it is showing the pullback number at 988. Okay, so the pullback number is up here. Oops, pullback number is up here at 988. Right there is your pullback number. So remember, this is the price number that it should be going to, and the time. You can now get the time associated with it too. Oops, I'm going to put that back here, the 988 thing. Okay, so you can now draw the time part of this too, because now it's exceeded the swing low. So this is the time element. Oops, a little bit more. That's your time element right there. Right. So by this time, it should be right here. That's what you should be seeing. So the way that things are setting up right now, I mean, it's possible it's going to go straight down there. That's your price element right there. The bottom of this bar right here is your price element. Bottom of that line is your price element. Now the time element, it could do it early, it could do it right now. But it's set up to pull back up to here and then have another push down right now. That's what it's looking like to me. So you get another opportunity out of this, right? We had the entry right there, and you were able to see the entry perfectly, right? Go back out here. Greg. Okay. So you're able to see the entry perfectly. And now all the other pieces just come together. All right, so here's your pullback now. It should get up to this level right here on the pullback, 988 on the pullback. And then as it stretches out, it should get down here to finish the diamond principle. Okay, that's what it should do. We'll see what it does do, but those are the pieces of the puzzle. And they're always right there. They're always right there in front of you. This one right here just did a similar thing. Now, if we put the whole puzzle together over here on this one, what you're looking at on the NQ in the future, without drawing all this stuff around, you're looking at it being right here. So how many minutes is that away? That's 13 minutes from now. You're looking at it being up here at this price. Okay. And the ES doesn't have anything, but we could do it with the Russell right here because the Russell just put in a higher swing. So we could do it with the Russell. The Russell's not really all that exciting, but the place the Russell's looking like, it's kind of stretched out too. It dragged it out like 10, 12 bars. So it's looking like it's just going to be something like that is what the Russell's looking like. If you don't see all that, you should take the trial. And Greg, I know you've done that. But if you don't see all that, you should take the trial and get in there. You know, it's part of the lesson plan. So the diamond principle is part of today's lesson plan. But I'll be talking about it all week. Okay, and to take that trial, take said trial, aforementioned trial, go here to mytradingiq.com, click on the purple button right here. All right, there's no credit card required for the trial. Click on the purple button, go here to registration. Even if you've taken the trial in the past, you get in there and take it again. You know, it'll let you know if you've taken it too soon. But first name, last name, email, phone number. 5 multiple choice questions. If you have Ninja, give us your Ninja ID. Not Ninja ID, I'm sorry, give us your machine ID. We don't want your Ninja ID. Ninja ID is not going to help you at all. Give us a machine ID. If you have a TradingView, give us a TradingView login ID. Okay. That is what we need. All right, so it looks like this thing is going to make another move down here and get down to this level well before the timeline. This one over here is starting to pull back after exceeding the prior swing high. So this one could be within the timeline, but it looks like it probably won't have enough juice to get there. I'm not sure. I eyeballed this one, so if I do it correctly, If I do it correctly, then it should actually be, that's about right. Yeah. And 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 12. So 1, 2, 3, 4, 7, 8, 9, 10, 11, 12. Yeah, I'm pretty close on the time too. Okay. If the markets continue working like they normally should, then that's what you should say. This one's getting there early. Over here, we're pretty close. We're off by two bars, but we're pretty close. And over here, well, we'll see. We'll see what happens over here. Oh wow, it's 1:30 already. Man. All right. Well, we did get one good trade off. In these really slow markets, that's all I can hope for, I guess. I am going to show you again how to take the trial. Go here to mytradingiq.com. Click on the purple button right here, 9:15 to 11:30. No credit card is required for the trial. Click on that, and it will bring you to this registration page where we ask for your name, your email, your phone number. And here, just give us your first name, your last name, your email, your phone number. 5 multiple choice questions. If you have NinjaTrader, give us your machine ID. If you have TradingView, give us your login ID. All right, and that is it. That we can pass it back out to fabulous Phoenix, Arizona, in Studio A, overlooking South Mountain, America's largest city park. Wait, if you are ready.
Yep. Recap of the morning session.
Today it took 3 minutes and 1 trade to get to $2,000.
Good job.
Thank you. Thank you.
All right, guys, you're left off with crude. And again, we have rolled forward to the October contract, GCLV 24. This is where we opened last night. These are last week's zones. This week's zones come out Monday morning, 6:15 a.m. Eastern. So on tomorrow's broadcast, you'll see this week's zones. So these zones were created for the previous contract, but as you can see, they're still doing their job. We opened below the BBC, came down to the zone held as support sent us up to resistance sent us back to support, to resistance, to support, at the target. That support sent us to resistance, which sent us back to support, which was just above Friday's low. That support got us above the weekly zone. We didn't make it all the way to the long target. We did make it to this high right here. It's market structure. Resistance sends us to support, back to resistance. Now all the way down to support, 73.35/73.40. Last week's zone, and the low we put in was 73.45. But again, since these zones were created a week ago Monday, published a week ago Monday, we have rolled forward to the October contract. Gold, here's where we opened last night. Price always reverts to the mean. In our case, the mean is green. It's called the BBC. Bull bear cross. Price crosses above the green line. We're bullish, anticipating higher prices. Price crosses below the green line. Bearish, anticipating lower prices. So here's the open. It sent us down to the BBC, which we expect to be support until proven otherwise. Give us a bounce, a leg, and a retracement, and a leg, and a retracement, and a leg. And this leg is basically this high right here, put in earlier in the session. Same as these highs. Then price drops below the BBC, blue and climbing, turns to red and falling. So we get a leg. Which is this low from Friday. Support bounces up to resistance at red and falling. That sends us down to the zone, which was 25.22/23, and we hit a low of 23.7. Support again sent us to resistance, where we've got a ton of tops right at that level right there. Price is pulling back to the BBC. If it holds, we need to get up above this high, trade up to the long target. If pull back to the BBC and the pullback doesn't hold, then 25.34 down to 25.30, 25.29, and down to the zone at this low right here. Call it 25.24 to be conservative. Silver, here's where we opened last night. Price is trapped between support, BBC, resistance at blue and climbing, which got above price. Price rolled over, became red and falling, bearish. So, we get a leg and a retracement right into resistance. That resistance sent us to support ×2, the zone and the BBC, which gave us a leg to the upside, retracement, and a leg, basically a double top there. That resistance sent us all the way back to the zone below support, which got us back above the BBC, looking for resistance, which we found at the high of 29.3. Price drops. We're headed back to the BBC, which we expect to be support until proven otherwise. Get support, then we'll get another leg to the upside if the pullback fails to hold. And right here where you have the bullish cross, you got to expect that to be support. And of course, this low is potential support. This low, and then the zone. The euro opened here last night. Struggled with blue and climbing, finally overcame it, made it to the zone, resistance, retraced, found support at the step line, and a double top right there. Resistance sent us to support at the BBC, got a leg, retracement, and then a big leg. Now notice the step line is starting to arc right, which means it's going to cross blue and climbing. And when the step line crosses blue and climbing, price will typically retrace back to the BBC. That brings us all the way back to the daily chart, where we're still just shy. We've taken out this previous retracement high, but we're not quite to the 38% fib extension. Take out the 38, then watch this high right here at 56.2975, and the 50% fib extension, the 62, and the all-time historic high, 57.2175. To become a member, go to mytradingiq.com. If you have questions, call 949-42-EMINI. Send an email to support@cfrn.net. 9 out of 10 new traders fail. Why? Because they don't have anyone to teach them how to trade. They buy books, they watch YouTube videos, They buy the latest and greatest indicators and oscillators off the internet. But somehow those things just never seem to do the same magic that they do on those cherry-picked videos that were part of the package that you bought the indicators and oscillators from. Why is that? Well, where we differ is we let you use our indicators and oscillators and attend our live training room and give you access to all the resources members have for 5 consecutive trading days before you spend a dime. No credit card required. Once you become a passport holder, you'll have access to the live training room 2 hours every trading day. It's an interactive trading environment. You're never going to learn how to trade by just watching somebody else trade. You got to ask lots of questions. Why'd you do that? Why'd you say that? What's the reason for that? Your questions are not an interruption of the process. Your questions are the purpose of the process. 2 hours every trading day so you can learn how to trade. 9 out of 10 new traders don't have that. Now, does the passport guarantee you become the 1 out of 10? No, that's not possible. Even though we give you all the knowledge you need, all the information, answer all your questions, and provide you with the tools to do the job, we have no control over how you're going to utilize that information or those tools. Are you going to follow the rules? Use them as taught? Are you going to exercise patience and self-discipline? Or are you going to just fall into your old habits and pull the trigger and hope? Hope's a wonderful thing. The world should be filled with hope, but it's not a good trading strategy. Along with 2 hours of live training every trading day, you have access to private one-on-one mentoring, no extra charge. The strategy you learn, the indicators you own as a passport holder, are fluid across all markets and all time frames. Support, resistance, back to support, back to resistance, over and over again and again. That's how price flows, whether it's futures or stocks or crypto or Forex or ETFs. Price flows the same across all markets and all time frames. As a passport holder, you get the Logic 247 alerts around the clock, the concierge trade alerts every night when the report is published, you get the weekly trading zones Monday morning at 6:15 a.m. Eastern, and you're able to attend the members only workshop every Thursday night at 8 p.m. Eastern. It's everything a trader needs, all under one roof, one low price, and around the clock support. mytradingiq.com. Our good word for today is servants for life. Romans 1:1. Paul, a bondservant of Christ Jesus, called as an apostle. In the Bible, the word minister isn't just a noun, which denotes a person, place, or thing. It's also a verb, an action word. It's what you do, not what you claim to be. I'll never forget the first time I heard someone tell me, I used to be a pastor. Now, I was much younger than I am now. But that struck me as odd. That would be like me saying, I used to be Caucasian. Because I saw a pastor not as what something a person did, but who they were. Now, many still see it that way, but I understand that many don't. Think about the next time you talk to a pastor or a minister. Are they in it for life? Is it who they are, or is it what they do for the moment? And I got to tell you, there's a huge, huge difference. I mean, that was one of those days for me when time stood still. I had grown up in a Christian household, joined the Navy, got married, spent 20 years sowing my wild oats, and at 37 returned to the God of Abraham, Isaac, Jacob, and my grandmother. And as I actively became involved in ministry, that's when I heard someone say, I used to be a pastor. And it just, that time stood still. If you used to be a pastor, were you ever a pastor? Now, I'm sure that's open to debate. I don't know if there's any right or wrong answer. All I know is it changed my perception of people of faith, of the quote unquote man of God. So, not knocking anybody, not trying to cleric shame anybody. I'm just sharing my heart with you. In Scripture, the word servant sometimes referred to a third level galley slave chained to the oar of a Roman ship. Day and night, they rowed to the beat of another, and whether in battle or in merchant service, they expected to die chained to that oar. Quite a picture. Paul says in Romans 12:1, Dear brothers and sisters, I plead with you to give your bodies to God because of all he has done for you. Let them be a living and holy sacrifice, the kind he will find acceptable. Paul had no doubt about what God had called him to be. When he referred to himself as a bondservant, he was describing a slave who served his master faithfully for 6 years. In the 7th year, the law of Moses required that the slave be set free. But if, when he was released, he came back and said, Master, I'm not serving you because I have to. I'm serving you because I want to. His master would take him before a magistrate and pierce his ear, signifying that he belonged to him forever. Exodus 21:6. Sometimes you need to look up and say, Lord, I'm not serving you because I have to. I'm serving you because I love you. Pierce my ear. Mark me as yours. Bond me with you so I can never belong to another. when you think of everything Jesus has done for you, is that really too much to ask? That's our good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.